I'm down 3.25 over 3 weeks. I'm a 3.5. This is close to entering neutral territory, but I am absolutely at the point where I'm looking to speculate to the downside, right? I'm looking to trade this momentum. I'm now thinking we're more likely to head into a corrective zone. So yeah, I'm not bearish, but I'm willing to trade bearishly when I have this type of a momentum decline. I don't want to be bearish unless we cross 10% and we start thinking now we're heading to 20. Now we're moving from correction to bear market. But you'll notice I'll be bearish way before we actually say this is a bear market. The market has to be down 20%. I'll be well bearish by the time that happens, right? And then if it goes, we have bear markets to go down 50%. I don't think that's where we are though, right? That's what I want to emphasize is I'm willing to trade a couple of these downside windows in a 10% correction, expecting that by midsummer to late summer, and we're down 10%, and the Fed's like, oh yeah, here we go, we're about to start, right? Then all of a sudden we can resume because overwhelmingly the market is still strong. We still have positive GDP. We're going to see Thursday, I believe it is. We'll look at the economic calendar. It's not going to be 3 point something like it was, but 2% is fine. We live on 2% regularly on GDP, right? Jobs are good. Labor market's good. Profits are good. We'd love to see inflation ease just a little more so the Fed can kick the rates back down and that'll reinvigorate. But overall, what am I leaning towards? I am right now, if I had to make a bet on a midterm prognostication, I would say a 10% correction. Unless we get a V here all of a sudden, let me go back to now. Unless this thing V's, which, boy, I'll tell you what, when you look at our volume dropping off the way it has, less than average. Am I wrong? Tell me if you think I'm wrong. Are you trading? Are you massively bullish? Bunch of bullish trades? Are you concerned at today's lackluster representation of buyers after yesterday? Are you concerned that we're bumping our head on the underside of the 50-day moving average? Do these things concern you? Are you concerned that this, let's change colors here. Let's go to a fun light blue. Surprised the VIX is not higher, but it's escalated. I'll tell you what, it did drop quite a bit, right? I actually snuck a calendar spread in, but I look at this as being leg one. Leg one is like, okay, now it's what happens coming out of this that if we get that lower high confirmation, then what? Then we think that we're moving into leg two. Boom. Leg two has plenty of bearish opportunity, right? And based on how we come out of leg two, we may or may not. Sometimes it's just a two move drop, or we may or may not have. And then you'll notice it's what comes out of that. What come out of that was a V. That was the difference maker right there, was that V. If we came out of this one with a V, we would have been changing our forecast. Does that make sense? So this is all just representative of a 10% correction. This is not bearish. There's no part of us that should be like, I'm a bear. We're willing to trade bearishly, a few trades. So while the rest of the market sits and watches, and from this point, it takes them back to here to recover, I'm hoping, hey, maybe I can get 8 or 10% during that time. Right? And by the time it gets to here, I'm already on my first wave of bullishness, well ahead of the market, ready to move into what's next, right? Okay, so I'm in a couple of bullish trades, so if all of a sudden a miracle V came, great, but otherwise I'm going to be taking profits sooner, taking more, getting ready to tighten stops. And if you're wondering, now here's what's interesting, okay? And tell me if you think we're having the wrong conversation. If you're like, Scott, what the hell are you even talking about? You should be talking about X. If you got an X, throw it at me. Here's what I'm thinking. we did have quite a bleed off here, right? 100%. I still have a little piece of hedge. Took some more profit, still have a little piece, but here's the deal. Is it as good as it was down here? Down here, you're around $1.50, $1.40, $1.50, sometimes even cheaper than that. If you catch it down here, you're even close to $1.20. Right now, closer to about $2, but that's reasonable. My general thought is sub 16 or near 16, and that 5 weeks out, 5% out of the money hedge is in play. Usually you should be able to get one or two of them on before things escalate, but you can see, look what's happening here. What's our concern if this pattern continues, that we end up at one of these where we hit the mid-20s? When was the last time that happened, Scott? You're wondering. I know you're like, Scott, you're reading our mind today with the questions that you're bringing forth. Am I zoomed in here? How do I get to 1 year? Did I lose it? There you go. Last time we were way up in there was in October. And you can see now remember this. Oh, I gotta tell you this. You might think, Scott, we got close to that. We didn't. This is a bad data. None of this happened. None of that happened right there. But it never got above about 19.5. So 22 is definitely like if we spike back up, that's our concern. And if we get up into that area, those options are going to be worth $4 or $5, especially if the market drops. So can we still hedge it too? My answer is yes. That's my thought. Let me know if you disagree. I feel like I'm a little monologuing today. Give me some back and forth. What are you guys thinking here? What are your concerns? Am I voicing your concerns? Am I talking about it? Have you been seeing this same kind of a pattern here? Because this came down pretty quickly and now is like grinding to a halt. And if this thing turns around, then yeah, I'd like to get a hedge on as quickly as I possibly can, or else it's not going to be that cheap anymore. But that's my thought on the VIX. Okay. So what else is happening? Earnings is coming now. What do we have? GDP. We were at 3 weeks in a row. There's just no concern in this situation. Favorite Fed. And when Jer Bear hangs it up, I'm going to be lobbying heavily for the legendary, hallowed Sir Arthur Goolsbee to become the new Fed chairman. Oh, dreams. The dreams I have. Anyways, he said it. It's pervasive. You get one bad read, CPI, PPI, one bad read for a month, and you're like, 3 in a row, and you're like, But remember, the PCE is the most favored of the inflationary data that the Fed looks at. And so right now, what is it still looking to do? Stall. Year over year, 2.5 to 2.6. But it is in the twos, mind you, right? It is in the twos. And core is expected to drop. So now here's the deal. If these unexpectedly are worse, it doesn't matter if they come in this way, the headline's going to be like, it's worse. But we know that it was already priced in to be this expectation. If it comes in at 2.7, that's a problem. If this comes in at 2.8 or higher, that's a problem, right? So that's what we're going to be looking for on Friday. So a couple of big things. We'll be talking Friday. We'll have this information in hand by the time we speak Friday morning. That should be interesting. I think that's really what the market's waiting for more than anything else. GDP to some extent, PCE even more. Do you think I'm right? Do you think I'm wrong? You think I'm just talking to hear myself? I don't know. What are we doing here? Let's go look at the model. Oh, I don't even have it up. That's a problem. Let's get it up. Let me get the model going here. You trading? Okay. Okay, fair enough. Stella says what? Same thing that I'm concerned about, and that is bear flag. Bear flag. Did I do the quiz? Nope. Let's do the quiz. Then we'll come back to this because I'm going to run out of time on that. That's a good call out. I appreciate it. Let's get to it. Maybe that'll get some energy going. I feel a lack of energy. calendars, butterfly. We're movable. We're moving into sell in May, go away territory. In addition to the fact that we think that we're going to stall because of the Fed, our whole summer doldrums may be just waiting for that light at the end of the Fed tunnel. And as soon as it comes, boom, don't fight the Fed. That's the rule. What am I looking for here? 5 minute, nope, 15. Let's go 5. And right at the end of the day, the question is, do we break back up to the upside and close near the highs? Do we fall and close near the lows? Or does it meander and settle in the middle? ABC. And I'm going to go first and say B. I'm just going with the probability. It's a pretty good size range, actually, as I look at it now. Should I redraw? No, I'm going to leave it. I'm going to leave it. See if anyone calls out the ups and the downs today. Maybe today everybody wins. John is a B. Fred is a B. LK is a B. Brad is a B. I love it. I love it. Stella is a by 2 o'clock, 505.86. 505.86 is basically just like bounce off of it right back down. Everybody's a B. Today, everybody's a winner. What's it going to do? It's going to break out. We're all going to think, sometimes people say if everybody's a winner, nobody's a winner. But I disagree. Not in this room. If everybody's a winner, everybody's a winner. Here we go. Here we go. Okay, so yeah, I mean, look, God, it's like it screams right now, bear flag. I've had plenty of times where I get surprised and a V just shows up out of nowhere. Boom, we end up right back up in this area here. And if that happens, I would wonder, like, does it come with any kind of a volume? But right now, I would say that based on what I see, the probability is diminishing. Like I said, that volume right there is whatever hint of buyers they mustered up here after the sellers are like, hey, we're gonna give this thing a yank. It was with a little bit of a yar with it, right? That was today's volume was a little giggle. You're like, did you giggle when you pulled? Because I think the sellers are about to yank it again. Okay, let's see. Now, what else do we have? Like I said before we paused for our quiz, let's go back to. We'll go back to the short term. Stella's like, bear flag. I'm like, did you see that bear flag? And all she could see, she's nodding her head like, yeah, for sure. QQQ, what do we see? Bear flag. And that's where I'm more inclined to go. Where is there more profits? Right? Technology that led us up is now going to start leading the other way down potentially. Consumer just seems like it could be like teetering. I still like communication services, but we'll see what happens with earnings on Meta and Google. I still like industrials, a little less so, but Caterpillar strong. What's happening? Caterpillar's reporting earnings. Definitely still like financials. Financials look great still. But the question is it going to be a leader who stays strong? Is it going to be who drops the least? Who knows? Right now, I would say if I'm going to go to the downside, I'm thinking technology. I'm thinking chips. I think there's some good money for us in chips, cybersecurity, things like that. So let's get some questions. I want answers. I want the truth. Are you willing and or considering bearish trades as this increased volatility unfolds? Question number one. Some people might be like, I'm just going to go cash and watch it burn. Sit on the sidelines. Both are viable. Cash, Fred said for sure, consider that we walk upstairs and fall out windows. So we've got to be Johnny on the spot when we think about these bearish trades. We're not like, I'm going to wait for some extra confirmation. Confirmation, what, you're going to wait for it to be on the floor, and then you're like, yeah. And that's where a lot of people get sucked into bear traps. And we must be nimble and quick in this type of a market. So if you're like, I don't know if I'm comfortable with that, great. Head to cash. Relax. Cash is paying 6%. It's not bad, right? You couldn't get a fraction of that 5 years ago in 10-year bonds. Consider some neutral trades where you don't have a lot of risk. You could adjust them. You got some things on, time's on your side. And you might consider some speculative positions. Great. But have that conversation in your head. I guess. Does that make sense? Let's look at the IWM. What's Vlad doing? I haven't had a conversation with him. Is he, I know his long-term is definitely more oriented bullish like me, but I think he's going to probably see the very same thing as some short to mid-term weakness, consolidative, corrective. Let me know if he's in that same boat. Are you in that same boat? I asked some questions. Someone dropped off. He's like, I'm tired of you asking me questions, Scott. All right. I'm just trying to stimulate thought. Ideas. IWM. I hate when I do that. Let's go back. I actually feel just fine. Things are going in a good spot and starting to build into what becomes a nice steady trade. I'm got some bearishness setting up. Right? IWM, more of the same. Oh, DIA. Did I do Dow? Let me do Dow. Okay. Oh, well, look at this. A little bit of a Dow boost. So the model picked up on something here, which could be what? The Dow moving when things are moving. The Dow moving when things are moving steady and a little higher when other things like the NASDAQ and the Russell are selling. Or utilities and staples moving higher when we see technology in a, well, if we start to see that further supports this 10% downside narrative that is setting up to some extent, right? Let's look at our seasonal charts. Let's look at the seasonal charts. What do we tend to see here? So here we are in April. So could there be a little bit of a bump? Yes. Now, normally this little bit of a bump here is at the end of a bullish bump, but that's not what we got. We're at, well, sorry, this is a little bit of a lag actually. So it's more like this. And now we're looking to see that last little bit. Yeah, we still think there may be a bump. The problem is this is what comes next. And we're worried that this might come next. And that it might, instead of going sideways and sideways, it might go, the light at the end of the tunnel. We start building those expectations in. And then all of a sudden, there's that's where I see it. This is where all of the evidence points for me. Now, what's the next thing we do? Let's go look at charts. Because, hey, are there still trades? Sure. Not Apple. That looks like the bear flag pattern. Big sell-off with heavy volume. Little upswing. It's green today. It's like, oh, Apple maybe is recovering. Look at your volume. Average right now, 56 million. 24 minutes left. We're at 33. We'll be lucky to get to 40 million. 70%, 65. If that's convincing you that the buyers, that's what I'm talking about. That's giggles. Tee-hee, look at us, Paul. Look at us. We're trying so hard. Doesn't look good. Now, Apple has some earnings coming up here, but that's in the vein where, I mean, look at this. This is already in it. I mean, look what we have. It looked like it was trying over here. Popped up with some volume, came back, and it never recovered. Popped up. It was like the buyers just can't do it. And this time, they're not even popping it up. Dying on the vine. AIG. I love AIG, but AIG popped up and is just starting to stall out. Earnings not too far. Buyers are hiding. Amazon. Quick little blurb and then rolling over like a failure to launch. Earnings coming soon. What sector? Discretionary. Yeah. It's tough. AXP looks great. Good earnings. Popped up. New high. Boeing looks not great. They gapped up on their earnings. They've given it all back and at new lows again. So the market's like, yeah, no, we're not convinced. Bank of America popped up new highs. A lot of strength. Nice signal, doing pretty well. Caterpillar, unfortunately, you've got earnings tomorrow before market. So if you liked it, you're like, looks good, but the problem is you're gonna have to play with earnings. Chipotle, same kind of a thing. Capital One looks great. Gave a nice little signal. Stalled a little. Well, you can see it's kind of trying to get some steam. I think it's worth being in. For me, even as you have earnings, and it might not be this one, something energy, oil related. Costco kind of flat overall. Delta, this is kind of a moving higher, but without a lot of consistency in its swings. So I'm not really seeing this as viable for trading. Okay, the Dow. See, I don't know. The model's calling for it, but I think the Dow looks like it's about to just jump up, smack its head on the 50, and just boop, drop lower. That's the look I'm getting. 2 days in a row, just sitting at that 50, barely getting to 75%. I don't know. 1, 2, 3. And you might be like, oh, I didn't get all the way up. Look, if you want to be dogmatic in your technical analysis, great, do it. Good luck with that. I'm looking at like the general principle here. What do I have? We went up, we got to 65, we bounced down. We went up, got near 65, we bounced down. Went up, got near 65, bounced down. I've established this midpoint through here. This looks like we're heading to 45. This last level back here before the move up. That's my prediction. Of course, it's not a recommendation of any kind, but I'm just saying that's what I'm looking for I'm looking for a pullback in the cryptocurrency markets. We'll see if my technical analysis prevails. GE had good earnings, popped up, but just kind of stalled out. So I don't know. Let's wait and see if it pulls back. I would say anywhere between above the 50 and in this area, yeah, you should have a nice opportunity for a trade setup that looks something like this over here. Okay. But you can see a lot less bullish, right? Gold still looks bullish. Anyone thinking about it? Google is looking bullish, but has earnings. So we got to see if they can sustain. Oh, the small caps. Oh, the small caps. They're struggling. Oh, they were so brave. They fought so hard for so long. But I believe that we may be seeing, let's go back and remind ourselves. Oh, look at that. You can see, even if it gasps a little higher, it gasps up 2 or 3 more days. You're like, no, wait, Scott, wait. Camp over here. From 184 to 161. That's 23 points. 23 points on 184. That's 12%. 197 times 0.88, 173. Boom. That's down here, right? That looks like there's probably a couple of trades, a drop on down and then up and then a drop down. I think, and how many was it last time? We had one. Same kind of a thought, right? I don't know. I don't want to overly bias myself or you out there, right? I don't want to overly bias anyone to be like, oh, Scott's bearish. He thinks it's dropping. That's not what I'm saying. I think that there's definitely some concerns here. But these bear flags start confirming, then yeah, I'm willing to trade bearishly. I'm willing to speculate to the downside, 100%. Where were we? Meta, well, let me go back. Microsoft on a big slew, in fact. Micron looks bear flaggish to me, and I am thinking about it. Netflix, struggling. Nvidia, struggling. I mean, right? What's not to say that Nvidia is the $500 or $600 stock, and we're at 8. Picard, I don't love that because I still feel like there's strength in industrials, but Picard is one I loved, and it's looking not great. QQQ looks bear flag. SPY looks bear flag. I think we're all going to win today. That B prediction is holding up. Amazing. I mean, I gotta say, and tell me if you agree, but once we failed to get the bullishness in April, my thoughts like, yeah, I think we're gonna move into like whatever May, June sideways, but with maybe with a little bit more of a bearish lean. We can trade that. Stall's gonna pump in, pump, and I'm gonna put a butterfly with it, and then I got right. So there's things we can do that aren't super speculative, but that give us the ability to trade, do well. Bob, you're so late today. But I'm glad you made it. I hope all is well. Yeah, we're not feeling it here. Right? Plot up your internet cable. That's not great. That's not great, and it reminds me that I have a shit ton of weeds in my back, and I need to do some tilling, and I don't want to. The yard is unruly. First weekend back. The worst. Anyways. What were we talking about? More cautious with bull trades, taking profits sooner, taking more, setting stops tighter, and that means that hedges are no longer hedges; they're now speculatives, right? So that third trade, that VIX trade, those puts are not going to be hedge puts; those are going to be speculative puts, and I'm going to be looking to put speculative trades on other things. Now the VIX at 15.5 makes it so I can buy those puts, but a lot of those technology stocks we looked at where we said they may be bearish, if you look at the vol, it's already pumped in there. So you can't buy expensive puts. You've got to think about something else. Do I do a downside broken wing butterfly? Do I do a bear call spread or a bear put spread? Something along those lines that allow me to put time on my side and not let volatility whip me around. I'm not really trying to make vol work for me. I'm trying to mitigate it. I'm trying to make sure it doesn't crush me if things go wrong, and mitigate. You're keeping an eye on that. Tonight we have Metas tonight. Metas tonight. I dropped IBM from my list, so I don't know. Waste management. That sounds right. Yep. What else? Taiwan Semiconductor. I mean, that looks like it wants to be a $105 stock. It's having imposter syndrome up here, right? And its next drop is down here to about 112. You can see, look at this move from 112 up to where? Right there. Where are we? Oh, and then from there we go up to about here and then down to here. I'm looking for it. I'm not predicting it, but I'm definitely looking for these things to be setting up. This vol's not terrible, but yeah, I don't know. I'm not sure. We'll see. We'll have another conversation on Friday, and we'll see what we think about that. Where's the VIX now? VIX is just kind of stalled out at 15.5. It's not getting back. You'll notice that these old highs right here, high, boom, low. It's keeping it. It's keeping that vol. It's holding on. It's holding on to that trauma. That would bring all of SMH down. Oh, I think that's a great call out to take a gander. Look at that. What do we see here? We see a scampers. Does this look like we may have something? Yeah. No, I definitely think semiconductors is that place to be considering it, looking for it, right? Let's go look at the XLs. Let's look at Walmart. I don't know. Kind of iffy. Basic materials, love it. I'm not trading basic materials, and so all it's doing is that's going to be super helpful. That's going to be super helpful to seeing some summer inflationary data regressing. Communication services holding on for now, but we've got Meta tomorrow, or no, Meta is it? Yeah, Meta today, Google tomorrow, and that's certainly going to influence which way this goes next. Energy looks like it does look like Heiken-Ashi, but they're not. Looks like it's trying to bounce. I would, if it can just sort of meander and then just sort of drop and then regress back down. I don't think we're going to see it, but if we could see it back down into this area for a little bit, that would be helpful. Financials, nice little pop, but it's starting to stall out at lower highs. So, banks and credits look good, but insurance not as much. Industrials holding on barely and starting to just look a little iffy, right? Lacking confidence in this last little cycle. Technology looks just battered, and it looks like it's the leader of the bear flag parade. XLK, SMH. And now what? We've been looking for defensive signals. Ooh, all of a sudden, who's surging a little bit? Staples and utilities. That's defensive. Very defensive. That's going to absolutely diminish my score for sector rotation. Today is Sauvignon Blanc day. Sauvignon Blanc. Drink a little white wine. Healthcare looks bearish as well to me. However, I'm not going to trade it down any more than I trade it up. I like technology and semiconductors. I understand them better. And consumer discretionary. That I understand as well. Those were a couple of key leading groups to the upside that seem to be leading on our downside. Now, overall, this is why I'm not bearish. Because this still looks okay, and if you look at technology, it actually looks quite bullish still. we could have this correction down into this area down in here. I would say anywhere between like 180 and 185, and still look for a bullish long-term trend move to bounce up out of that. Okay, well, that's my story. And picnics type of a forecast, but more of a get our guard up and let's start digging foxholes, right? We're not panicking yet, but we're starting to prepare now so that we're ready if and when it's time to be in those fox. If you wait to dig it when you need it, it's too late. So preparations are now. Considering a correction is now. Because whatever I think about a correction not turning into a bear market, believe me, plenty have happened when I didn't think it until it was really on top of us. So a bear market doesn't come out of nowhere. Everything starts at 5%. That's our correction. Then we start thinking, is that it, or is it going to turn into 10%? And when it gets to 10%, we're thinking, is that it, or is it going to turn to 20%? When it gets to 20, we're thinking, is that it, or is it going to get worse from here? But I'm not going to jump to 20 if I haven't even gotten close to 10. Right? Again, I'm not worried about the weather 3 months from now. All I care about is the next couple of weeks. I can think about it and be like, yeah, when it gets to July, I bet it's going to be hot as hell. When it tends to be. Questions, concerns. Does this feel on point? Does this validate what you were thinking? Does this challenge what you were thinking? Does this spark an internal conversation for you? Sell and go away. Sell in May and go away. That's if it rhymes, it's true. Everybody knows that. Everybody knows that. Magical. Good day today. Not a lot of people. That's all right. Those of us who are here will benefit. It's good to talk through it. Let's Bob's going to check his 8-ball. He'll get back to us Friday morning with a detailed report. And I will second it with mine. And after that, we'll just kind of see where it goes from there. I'll meet you back here on Friday morning at 9:15 a.m. Eastern Time. Have some coffee, some ideas, and we'll talk about it. Thanks, everybody. Have a great rest of your day. As always, happy trading.